Hello, this is Richard. I'm the lead developer with AlgorithmicTrading.net. I'm going to be reviewing the closed trades for the third week of November for the Crusher, the STY Futures, Iron Condor, the Day Trader, and the Bearish Trader portfolios. Feel free to pause this portion of the video and read through the disclaimer. Keep in mind that futures and options trading is not for everyone. It involves substantial risk of loss. Also, past performance is not indicative of future performance. And keep in mind that we are a third-party trading system developer. We're not registered CTAs, so we do not control client accounts. We simply sell the license to use the algorithms. Okay, so first I'd like to start with the Crusher. The Crusher did really well this week. In closed trades, we closed out a positive 1,494 per 30K traded. That's about 4.98%. And you can see here that we had a total of 4 trades. So we had 4 of these swing trade BF, which is the momentum algorithm. We had 1 covered call trade closeout, and then the Iron Condor closed out a trade. And then we did have 1 day trade breakout long. So the total gain you can see here. For each trade, the profit loss, you can see the protection, which is on the Iron Condors. We buy protection when we sell the call and we sell the put. We also buy a call and we buy a put. This is the commission. So for the options trades, it's $20, and then on the futures, it's $6.50. Here's the entries, the exits. But what I'd like to do is go to the charts and kind of walk you through the trades. So for the 4 momentum trades that we had that closed out, those are what you see right here. So this is a chart of the S&P E-minis. We were in a trade from the 9th of November, and it closed out on Monday the 14th for a gain. And then on Monday towards the market close, we got in. We got out the next day on the 15th for a gain. Then we got back in at the close on the 15th. Held for 1 day, actually 2 days, and then the second day we got out, which was Thursday the 17th for a gain. And then this last one was we got in on Thursday at the market close. We got in when the market gapped higher and then rallied for a little bit. We got out, and then the market sold off. And then of course we got back in to the momentum, so we're currently long the momentum algorithm. So we had 4 winning trades, as you see here. While we're looking at this chart, we'll also look at the covered call trade that we had. It was basically a break-even trade. We when we went long the momentum ES on Monday, we also sold the calls at 21.75, and we collected 4.50 points in premium with a 21.75 strike price. Because the options closed at 21.79.75 on Friday, our PL was actually 1 tick negative, so $13. And then if you add commission, it's a total loss of about $33. So the covered call was essentially a flat trade, and then we had these 4 profitable momentum trades. So let's look at this day trade now. Okay, so here's the breakout algorithm, and I'll kind of zoom in to the trade that we're talking about. So this is these are 9-minute charts or candles, and again, this is the S&P 500. So on Thursday we bought the S&P, and then we got out at the close. So this was a really good trade, and it was the only day trade that we had this week. Okay, so the last one I want to look at is going to be the Iron Condor. Okay, so here's the Iron Condor chart, and this is actually a newer strategy, but what it's doing is when it generates a signal to buy, then we initiate an Iron Condor position. When we do that, what we're doing is we're selling a call and we're also selling a put. So we collect premium for both those options, and what we want is for the S&P on Friday to close kind of in between these two lines, in between 2175 and 2145. So in this case, the market did rally, but not by a lot. So overall, this was a profitable trade because the S&P closed above the put that we sold. So this was a full profit trade, and it did close above the call, but not by a lot. And so the call side of this trade was, I believe, flat, and then we're full profit on the put side. So it ended up being a net profitable trade. If we look here, that's kind of what you'll see. So here's the iron condor. So here's the short put. We collected 6.50 points in premium, and each point is $50. The strike was 21.45. So this trade, or this leg of the iron condor, was profitable by 325. But then the call side of the iron condor, the strike was 21.75. They expired at about 4.75 above our strike price, but we collected 4.5 when we sold it, and so we're only negative by 0.25, which is about $13. And then we do have the protection that we bought, so we don't list the details of the protection, but essentially we buy a deeper out of money call and a deeper out of money put, and that's what this is right here. We do that to protect us in case the market moves really strongly against our calls or puts. So overall, it was a really good week for the Crusher. The total profit, if you add up all of the PL and then take out the commission and the protection, was 1,494. So a really good, a good week for the Crusher. What I'd like to do now is look at just real quickly the other algorithms that are traded, just to show you that we didn't have any trades. So this one here is the gap short. We didn't have any trades this week. This one here is the breakout that we just looked at. This one is the breakdown. This is our short day trade. You can see there were no trades. And that's good since the market was going higher. And then this is the treasury algorithm, and we got stopped out of the last trade we were in, and because the treasury's been selling off, this algorithm is not triggered again. So we've been flat on this algorithm for a while now. And then here's the momentum bullfire algorithm plus the covered calls that we already talked about. So when you add up all those together, then that's the S&P Crusher. The other portfolios we have, one is called the ESTY futures, and all these other portfolios are subsets of the Crusher, and so we're not going to go through all the trades again because this is just a copy. But the ESTY futures trades in $20,000 increments. It does not trade the iron condor, so you don't see that here. And so when you back out the iron condor, the profit was $1,272 on a 20K account. That's 6.36%. And so you can see all those trades here. If we look at the next portfolio, it's the iron condor, and again, we already looked at those trades. So the total was $223. This one trades on $10,000 increments. So that's about a 2% gain. The day trader is another portfolio that we recently put together. This one just does all the day trade algorithms. So you see that day trade breakout that we already looked at, and it had a gain of 269 when you back out the commission. That's about a 2.6% gain for the week. And then the last portfolio is the bearish trader. This one only trades 4 algorithms. The only one that triggered was the covered call, and just keep in mind that on the bearish trader, even though it's called the covered call, it's really not a covered call. It's a short call, and so it took a loss of $13, and then when you add in commission, a loss of $33. So basically flat. This one trades on $25,000 increments. So that's a review of the trades that we had this week. Overall, like I said, a really good week, and please feel free to give us a call if you have any questions. Shoot us an email, You can request a live demo and we can go over these trades in more detail. Lastly, as we said at the beginning, trading futures and options is not for everyone. It involves substantial risk of loss. So consider that before you decide to use our algorithms. We are a third-party developer, so we're not registered with the CFTC as a commodity trading advisor. And so all this data is not audited by the CFTC. As a third-party developer, we're not required to register. We claim the self-executing exemption. With that said, please let us know if you have any questions, and we look forward to kind of reviewing the next week's trades with you next week. Have a great day. Bye-bye.